Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on the market. We're going to look at SPY, IWM, QQQ, financial sector, Netflix, CMG as a couple individual names, and we'll just do a quick comparison to oil. I'm going to look at oil and natural gas more in depth in the weekend commodities video that I will put out shortly. We're going to start on the weekly time frames and zoom in from there now that we have the end of the week and we have the bulls still in full control. You can see SPY closed at the high of the week. We know a weekly lower high compared to 280 is very likely to form, but there is no indication at this point that that weekly lower high has formed, so the bulls do still have this short-term control, and there's a lot of space up here where we can form a lower high at 260, 265, 268, so trying to time that is a little bit tricky, and the shorter-term time frames, we've seen the bulls buying the dip pretty consistently the last 3 days in a row. So the last 3 days, the bulls haven't really done much impressive aside from holding on and seeing bulls buying that dip. We're not getting a whole lot of significant follow-through, but a strong close at the high of the day the last 2 days in a row is pretty healthy. Best case scenario for the bulls is this sideways consolidation before continuation, and that is a breather that the bulls can take here in terms of cooling off some of the shorter term RSI levels from overbought conditions and potentially see follow through. So we did close very strong for these bulls, and at this point our short term support is 255.50. That's our little higher low attempt. And if we see continuation, that'll be our new little daily higher low and a very brief little bull flag there. So we had the correlation with oil very strong on the short-term time frame. Pretty much each 5-minute candlestick mirrored each other on Wednesday and Thursday. And on Friday, that broke a little bit. It was still very present. The correlation was there. If the strength, 0 out of 10 is 0 weak, 10 strong. Let's say Wednesday and Thursday was probably a 8 or 9 in terms of correlation on the 5-minute time frame, and I'd say Friday was about a 7. So while we started with correlation in the morning, we did break here in the afternoon with SPY seeing a little bit more bullish action. Then oil held the low of the day by 3 pennies and then started to bounce into the close, and that ensured that the market bulls could close pretty strong as well. So there was definitely a bit of a pullback, but you can see at about noon, that is when the difference started to really stand out. So oil got a day of consolidation, and we'll look at oil more in depth in that other video, but SPY, sideways consolidation, continuing to favor the bulls. So this is a point that I want to make where the last few days I've been looking for a pullback and for bearish entries, and I enter each morning with bearish entries as something I'm scouting. The difference this previous day, Friday, was look at the 15-minute time frame for oil heading into the open. That RSI was down in the teens. So that tells us, we're heading right into the open with an RSI in the teens on the 15-minute time frame. The 5-minute RSI at that point was down oversold. So we know a short-term bounce is coming. So if we know that the bell's about to ring for the open and that oil is in extreme short-term oversold conditions, we can say the market's probably going to see a bounce first thing in the morning, as oil is likely to as well. So that helped us with a bit of a gauge in terms of, even though we're looking at a pullback and we're seeing SPY open lower than we closed on Thursday, we're still going to be looking for the bulls to show up in the morning because of this oil anticipated bounce. So I actually ended up playing oil bullish in the morning. But the point I want to make is that while we can be scouting bearish and watching for bearish entries and not be comfortable making bullish entries, it doesn't mean we have to be in bearish positions. So I cannot like a bullish entry Wednesday, Thursday, Friday, and just not enter bearish. So just because we have bias in one direction or just because we are not comfortable trading in one direction, it doesn't mean we have to be in the other direction. In times of uncertainty, in times of choppy action, we have to pump on the brakes and slow down the amount of trades that we are making, because if we apply the same amount of aggression when things are very clear as we do when things are unclear, we're just going to get back our profit and get thrown around in the choppy action. So this week was an example where I made a couple attempts for bearish positions, LABD one day, SPXS, the inverse ETF for the S&P 500, another day, stopped out both of those break even and didn't aggressively try, every single day to make 3 different bearish entries. I tried a couple times. I saw setups that I liked. I got stopped out. So just patiently waiting until I get a setup that I like, although I will now be keeping an eye out for potential bullish entries because I'm more comfortable After 2 days of sideways consolidation and 2 days of buying the dip, I'm more comfortable than I was, say, on Wednesday, where we were at the top of a fresh, significant bull move with a lack of consolidation over the previous 4 days. So the 2 days of sideways consolidation have shifted perspective to say, yes, we can absolutely see another leg up, and that would be very healthy consolidation before seeing that move up. And I'm going to be entering Monday with a fresh, clean slate where it's absolutely possible that the bulls can follow through here. IWM on the daily or on the weekly, again, lower high compared to 154.48 is very likely, but we are nowhere near setting the top. Well, shouldn't say nowhere near, but there's no signs that we've set the top of this bounce yet at this point. The daily time frame stays strong. Again, not a ton of follow through the last 3 days, but very clearly the bulls are maintaining control and still cautious for me as a bull, absolutely, because the last 12 days, 11 of them have been green. We know the bulls can't keep that up all this coming week, but they did see this dip by, and our short-term support is 141.35, that little low similar to where SPY formed that low. QQQ, same thing on the weekly, very likely to form a lower high compared to 173.31, and we're going to be looking at a loss of the daily uptrend to indicate that our weekly lower highs have been set. So a daily inside bar formed on QQQ on Friday, very tight range, and a break of 159.79 would have us looking at the daily support of 158.70. And if we get a bull break of 160.86, there's a little bit of a double top at 161.57 or 161.52, I should say. So we're in a very tight channel the last 3 days. And if we zoom into the hourly time frame, we can see it's still very healthy, but it is a tightening range that we need to be watching on Monday. And we have pretty much a double top on the tech sector and the financial sector, where if QQQ breaks 161.52, the SPY bulls will look for another leg up, and XLF on its daily time frame, again, financial sector absolutely looking for a lower high on the weekly, but no sign that it's set yet. And here's the daily resistance. We've pretty much got 5 tops in a row here at 24.51, 55, 52, 52, 55. So very clear resistance level there. But the scenario where the bulls do see follow through on Monday, Tuesday is if XLF breaks 24.55 and if QQQ can break these 161 resistances. That clears the way for another move up. So that's what we're keeping an eye on. And the daily support for XLF, we did break support Friday morning. We had the double bottom at 24.20, but we only broke it by 2 pennies, and then the bulls bought that dip. So no bear follow through on that support break is also a red flag for the bears. So bulls are still strong all over the place, but we have very clear resistance levels that both of these sectors have to break in order for SPY to see another leg up. So individual names, Netflix has been on fire after upgrades. We're breaking all kinds of weekly resistances. It is our lead tech bull by a long shot. Citron went short on Friday, and in my opinion, they're just short because it's very overextended. It has nothing to do with the fundamentals. And the daily time frame is showing no sign of slowdown. So now we know there's a bunch of people short. So if we do see more upside on Monday, Tuesday with the SPY bulls seeing follow through, that would be a scenario where we could see another leg up on Netflix with a short squeeze for a break of 341.09. It is absolutely worth watching for a bearish entry on Netflix, but you don't want to try and time the top and, nail the top at this point because things can get overextended, as we are certainly seeing at this point. I would be waiting on Netflix for a loss of the hourly uptrend. There's been a couple times where we have started the morning with a break of support, but the SPY bulls buy those dips and we get follow through here on Netflix. So key short-term support is 335.67 and then 328.52, and I am keeping an eye on it. I haven't made a bearish entry attempt on Netflix yet, but I might enter common shares short here this coming week if I get the setup that I like and if I see that market consolidation is going to be coming. So I don't see that setup at this point, but I know that Netflix is going to be on my watch to see if I can get any weakness and then do a top fishing play. And the top fishing play is, let's say we were to break 335.67, this hourly support, first thing on Monday. If I enter bearish on that break and I put my stop if 341.09 were to break and we were to see continuation, I would exit and get stopped out if that level were to break. So that's something to be watching first thing on Monday. And again, it'll just be healthy consolidation on Netflix, but we're just so extended that even healthy consolidation, we could see a solid 5 to 8% pullback on this daily chart. CMG is another one of these names where the weekly chart just exploded. And look at this daily chart. It's just a V-shaped recovery and then some. And CMG is one of these names that is correlated very It's much less correlated to the S&P 500 than any of the other major names that we follow. So be aware of that fact. And when I see a pattern like this, that's pretty much a higher low every single day, except for one little day mixed in here. But essentially it's 3, 6, 12 days, where 11 days out of those, it's a higher low. That's a pattern that I look to break. It is a bearish reversal candlestick on Friday. The bears have to break 504 support to see the start of daily consolidation on Monday. But if we do see that, again, this is another name where even just healthy daily consolidation, we can see a 5% pullback. So keeping an eye out for any CMG weakness as well. This is another one where I haven't made any bearish attempts yet, but it is I'm certainly keeping an eye on it because of how extended it is. We are topping out at 510 a couple times throughout Friday, and we need to see a break of 505 and then 504 to start the hourly consolidation. So those are two just overextended names, certainly not looking for any bullish entries in those names. But again, like I said, I'm not comfortable being bullish because these two names are very overextended, but that doesn't mean I have to be in a bearish position. That means I be patient, I sit on my hands, and I watch for the signals that I want to see, both in the broad market and in these individual names, to make me confident that that short-term healthy daily consolidation is coming. So I appreciate you watching. I hope you have a good weekend. Check out that commodities video where I will go over oil, which will certainly be important for what we're expecting with the market this coming week as well. But congrats to the bulls because they're holding up really well at this point. They're shrugging off any of the fundamentals in terms of government shutdown and all that. And again, we know weekly lower highs are going to be forming on all these broader market names and in these sectors, but there's no indication that those weekly lower highs are being set just yet. So thanks again. We'll see you soon. I'm going to share with you all my trading trinket good luck charms that I keep on my trading desk and travel around with me. The first is an elephant from one of our members. I believe he sent that from Thailand. Second is your standard moose when you need the bulls to show up. Then I got Bert. Gave that to my grandfather 20 years ago. And the real winner, this is a gold-plated horseshoe that my grandfather got. He was in the Battle of the Bulge, but this is from a French farmer who let them stay in his barn overnight. And he put gold plating on it and then gave it to him on his way out. So that's what I use for good luck. And I highly suggest that you all have little trinkets for your own. Can't hurt.